This video documents how the potato transformed European economics in the 1700s, creating more millionaires than any commodity including gold, by enabling population explosion, industrial revolution, and massive wealth creation, then connecting to modern 2024 trend, where billionaires including Bill Gates, Jeff Bezos, and Chinese investors buying record amounts of farmland, creating largest agricultural land grab in history, revealing that food commodities and farmland being inflation hedge that wealthy understand, but retail investors missing, where, in the 1700s, one crop created more wealth than gold mines, slave trade, and spice routes combined. It wasn't valuable, it wasn't rare, it wasn't even popular at first, it was a potato. And it made so many people rich that Europe's entire power structure changed. Fast forward to 2024, Bill Gates owns 275,000 acres of farmland, Jeff Bezos buying ranches, Chinese investors grabbing American ag land. Why? Because they know something about agricultural commodities that retail investors don't. The pattern that made fortunes in the 1700s is happening again, right now, opening with realization that potato being most economically transformative crop in human history, where single food item enabling Europe's population to triple, cities to explode, industrial revolution to happen, and fortunes to be created faster than any previous economic shift, teaching that agricultural commodities being underestimated wealth creators throughout history. Before watching, did you know the potato created more European millionaires in 1700s than gold? Comment K knew this or blown away. Promising complete transparency revealing how potato created 1700s wealth through population explosion, enabling labor surplus for industrial revolution. Why billionaires buying farmland in 2024 at record pace, understanding food scarcity and inflation coming. What pattern repeating where agricultural commodities outperforming financial assets during inflation creating modern investment opportunity, and how retail investors can access agricultural commodity exposure through specific vehicles providing actionable modern strategy, establishing historical context where potato arriving Europe from South America in 1570s but not adopted widely until 1700s, due to superstition and fear, with European peasants thinking potatoes poisonous, aristocrats considering them peasant food, and religious leaders claiming they weren't mentioned in Bible, therefore being sinful, teaching that greatest economic opportunities, often starting with widespread rejection, documenting the transformation 1700 to 1850, where potato cultivation spreading across Ireland, Germany, Prussia, Netherlands, Poland creating agricultural revolution because potato producing 3-4x more calories per acre than wheat or barley, growing in poor soil where grain couldn't, requiring less labor than grain crops, and storing through winter solving seasonal famine, enabling year-round food security. Potatoes produce 3-4x more calories per acre than wheat. One crop change fed millions. Comment if you had no idea. Revealing wealth creation mechanism, where more food per acre meant population explosion, Europe's population tripling, 1700 to 1850 from 100m to 300m, labor surplus, more people surviving childhood, creating massive workforce, industrial revolution enabled, surplus labor moving from farms to factories, urbanization, cities exploding as agriculture requiring fewer workers per calorie, and capital accumulation, landowners growing potatoes getting rich from feeding industrial workers, teaching that potato literally creating the workers, cities, and capital that built modern industrial economy, providing specific wealth examples where Prussian landed aristocracy, Junkers, becoming enormously wealthy growing potatoes to feed expanding cities, Irish population exploding from 3m to 8m, 1700 to 1840, on potato-based subsistence creating massive but fragile economy, Dutch merchants getting rich trading seed potatoes across Europe, and early adopter, landowners in England and Germany, accumulating fortunes by switching from grain to potato, creating 50-100-year wealth advantage, teaching that agricultural innovation creating longer-lasting fortunes than speculation or trade, explaining the Irish potato famine, 1845 to 1852, as proof of potatoes' economic centrality, where potato blight destroying Ireland's crop, causing 1 million deaths and 1 million emigrations, Irish economy collapsing overnight, and British grain exports from Ireland continuing during famine, proving Ireland producing food but population dependent on single crop, teaching that single commodity dependence being catastrophic vulnerability, whether 1840s Ireland or modern oil-dependent economies, Irish famine killed 1m people in 1845 when potato crop failed, single crop dependence = catastrophic risk. Comment if this applies to modern dollar dependence, connecting to modern 2024 farmland grab, revealing that Bill Gates owning 275,000 acres of US farmland, making him largest private farmland owner in America, Jeff Bezos buying 290,000 acres in Texas, Chinese investors purchasing $13.9 billion of US agricultural land, 2010 to 2020, and institutional investors, pension funds, endowments, allocating 15 to 20% to farmland, versus historical 2 to 5%, creating unprecedented agricultural land accumulation by wealthy, documenting 5 reasons why billionaires buying farmland now. Where reason #1, food inflation hedge. Food prices rising 8 to 12% annually, while farmland appreciating 10 to 14% annually, providing inflation protection. Reason #2, hard asset during currency devaluation. Land can't be printed or inflated away, unlike dollars. Reason #3, supply-demand imbalance. Global population growing 80m annually, while arable land declining, creating scarcity. Reason #4, water rights. Farmland, including water rights becoming valuable as freshwater scarce. And reason #5, alternative protein production. Farmland used for plant protein production as meat alternatives growing, teaching that billionaires positioning for food scarcity before retail investors noticing. Bill Gates, 275,000 acres. Jeff Bezos, 290,000 acres. Chinese investors, $13.9 billion in US farmland. They know something. Do you own farmland? Comment yes or no. Providing retail investor access through 5 vehicles where vehicle #1, Farmland REITs, Farmland Partners FPI, Gladstone Land, offering 3 to 5% dividend yields plus appreciation. Vehicle #2, agricultural ETFs, DBA, corn, wheat, providing commodity price exposure. Vehicle #3, permanent portfolio allocation. Ray Dalio recommending 5 to 10% commodities. Vehicle #4, crowdfunded farmland, acre trader, farm together, enabling $10K minimum investments in actual farms. And vehicle #5, timberland REITs, Weyerhaeuser Potlatch Deltic PCH, offering land exposure plus timber revenue, teaching that multiple accessibility points existing for retail despite farmland traditionally requiring millions. Explaining the pattern repetition, where 1700 potato creating, population growth, industrial transformation, wealth creation for early adopters, and 2024 agricultural commodities, creating food scarcity response, inflation hedge demand, wealth accumulation by informed investors, teaching that agricultural innovations consistently creating generational wealth for those positioned early. Addressing criticisms, where criticism #1, billionaire farmland ownership being 1% of total US farmland. Gates is 275k acres versus 900m total acres, =0.03%. Therefore not actually significant trend, but rather media exaggeration. Criticism #2, farmland returns averaging 10 to 12% historically, versus stocks 10 to 11%, therefore not actually better returns, just different risk profile. And criticism #3, retail farmland investments being illiquid, high fee, and requiring agricultural knowledge, making them impractical for most investors, teaching that skepticism healthy but trend still notable. Providing practical implementation, where step 1, allocate 5 to 10% portfolio to agricultural exposure starting small. Step 2, choose vehicle matching capital and liquidity needs, REITs for liquidity, crowdfunded for ownership, ETFs for trading. Step 3, diversify across geographies and crop types, avoiding single commodity risk, like 1840s Ireland. And step 4, think 10-20 year timeframe, as farmland being generational investment, not trading vehicle, concluding that potato teaching being agricultural innovations, creating sustained wealth, early adopters capturing disproportionate gains, food commodities outperforming during inflation, and single commodity dependence, creating catastrophic risk, recognizing that billionaire farmland buying possibly signaling food scarcity concerns, where wealthy hedging against food inflation, currency devaluation, and supply disruptions. Strongly recommending every viewer consider 5 to 10% agricultural commodity allocation. Discovering most having 0%, creating vulnerability to food inflation. Research farmland investment vehicles, finding accessibility increasing through REITs and crowdfunding. And remember historical pattern, where agricultural commodities creating fortunes during inflationary periods. Thanking viewers for connecting 1700 potato economics to 2024 farmland investment. And closing with the potato made more Europeans rich in the 1700s than gold mines and trade routes. Not because it was valuable, because it fed people, and anything that feeds people in times of scarcity creates wealth. Food is the ultimate hard asset. Billionaires know it. That's why they're buying farmland. The question is, will you?